Hi! Decentralized finance has recently experienced exponential growth, characterized by the emergence of several chains or projects such as Mdex. This has led to an overload on the Ethereum blockchain, leading to an increase in the price of ETH and fees. Originally launched on the HECO chain, Mdex evolved into a multi-chain protocol after integration with the Binance Smart Chain. In plain language, we'll tell you what Mdex is, its history, benefits, and growth prospects. So watch our video till the very end so you don't miss the most important things. And right now we are beginning.
Mdex users can exchange cryptocurrency, aggregate digital assets for rewards, and trade on the exchange. Through innovative dualized mining, users can make secure transactions and benefit from a guaranteed liquidity process. Binance's Smart Chain integration and mid-March platform update made the Mdex exchange faster and cheaper than Ethereum. The exchange also acts as an automated market maker that automatically matches your trades, as well as an assistant for other businesses when launching applications.
HECO is a decentralized public network where Ethereum developers can develop and run dApps. The platform works similarly to Ethereum, which allows it to be compatible with smart contracts. It is more cost-effective and faster than Ethereum. It uses the Huobi token as a payment for gas. Mdex is a platform integrated into the HECO chain, which dominates the DEX sector. It began mining operations on the 19th of January 2021.
In just 2 months of its existence, Mdex has recorded $2 billion in total pledged value of its liquidity pool and more than $5.05 billion in transaction volume in every 24 hours. That exceeds the number of Uniswap and SushiSwap. The platform is also called DeFi Golden Shovel and currently has a total blocked value of $2.09 billion. Mdex uses a mixed or dual mechanism in its mining operations, namely transaction and liquidity mechanisms. Like other cryptocurrencies, Mdex tokens can be used for a variety of purposes, including serving as a medium for trading, voting, redemption, and fundraising, among others.
Mdex operates based on dual mining innovations that are used to provide secure transactions and guaranteed liquidity. The concept of depositing all funds improves trading activity, which leads to an increased liquidity process for the automated market maker. Thus, there is the flexibility to convert Mdex token coins into other coins or cash. It has a unique feature called the Innovation Zone. It is a trading zone designed for users who want to trade innovative tokens that are considered more volatile with more risk than others.
The protocol is fast and cheap compared to Ethereum because of the integration of Binance's Smart Chain or compatibility with smart contractors. On March 16, Mdex updated its platform to version 2.0 with improved platform features. It is a DAO system with transparent rules controlled by its participants. As an automated market maker, Mdex helps organizations create and run applications at high speed by providing the right platform to support this process. The concept of managing the token economy is vital to maintaining liquidity mining. Mdex offers high incentives like some DEX tokens through mechanisms known as buyback and burn and buyback and reward. These mechanisms were designed to increase the market value of Mdex tokens. Once Mdex mining is launched, 66% of the profit from the daily transaction fees are split into two parts. 70% is used to buy the Huobi tokens and the remaining 30% returned to Mdex is used for recording. Some portion of the Mdex token allocated to the secondary market is used to compensate participants who have posted Mdex. Usually, the main issue in the exchange market is liquidity, whether DEX or CEX. Mdex's simple method of mining and providing liquidity have proven effective in helping the exchanges obtain liquidity. It takes advantage of both the increase in the Ethereum ecosystem and the low transaction fees of the HECO chain, allowing users to take advantage of the dual method of mining.
The MANDALA exchange project was launched online on the 6th of January 2021 and was made open for liquidity and mining trades on the 19th of that month. It attracted many users with a daily liquidity value of $275 million and a transaction volume of $521 million. Exactly 18 days after its launch, the daily volume of transactions increased by more than $1 billion as recorded on the 24th of January. On the 1st of February, which amounts to 26 days of existence, MDEX showed another success, increasing liquidity by more than $1 billion.
A board of directors called a negotiating mechanism was set up on February 3 after the launch of the environmental fund, which is worth $15 million in MDX. According to records, MDX's transaction fees were recorded at number 3 in Ethereum and Bitcoin only 7 days after its launch. It later grew to more than $340 million in 2 months of operation. On February 19, MDX's 24-hour trading volume increased to more than $2 billion USD. However, MDX recorded another remarkable success on February 25 with a transaction day value of $5 billion. This represents 53.4% of the global DEX trading volume. Thanks to this success, MDX was ranked number 1 in the global DEX coin market cap. A total of 143 million MDX was distributed through $577 million in transaction mining grants and liquidity rewards. MDX was launched on a platform known as Binance Smart Chain. This was done on April 8 to support single currency mining, cross-chain assets trading and mining liquidity. MDX TVL exceeded $1.5 million within 2 hours of launch on BSC. The total transaction exceeded $268 million, while the current value of TVL on BSC and HECO now exceeds $5 billion.
The economic value of the MANDALA exchange token may depend on its flexibility, supply, and use. Since one of the crypto token functions in the Ethereum blockchain, the market value is bound to rise and fall periodically. The return on MDEX is 0.3% of the total transaction volume. It is deducted from the transaction fee.
The 0.3% fee charged on the exchange goes back into the system to replenish it and redeem the MDX for burning. Notably, 14% of this commission is used as a reward for users mining the token, 0.06% for destroying and buying MDX, and 0.1% to support environmental projects. Reports show that more than $22 million in redemptions have been made, and more than $35 million in reward have been earned. Participants who mine the token are rewarded. This is aimed at attracting more participants to the platform. MDX tokens are traded from one market to one exchange, with Uniswap being the most active. The maximum amount of MDX tokens that can be issued will not exceed 400 million tokens.
The MDEX platform is associated with unique advantages. It has become the best platform for SushiSwap and Uniswap in the ETH blockchain. High transaction speed. MDEX transaction speed is faster than Uniswap. It is developed in the HECO network, which can confirm a transaction within 3 seconds, unlike Uniswap, which can stay up to 1 minute. This delay associated with Uniswap may be due to the congestion found in the main Ethereum network.
Transaction fees are very low. For example, if 1000 USDT is traded on Uniswap, participants are asked to pay a transaction fee of 0.3% and a gas fee of $30 to $50. But for similar transactions on the MDX platform, the transaction fee, while 0.3%, can be recovered through mining. In addition, because of the subsidized transaction fee for participants with a token about $100 million in MDX, the transaction fee is zero. Unlike other DEXs, where the recent ETH blockchain gas crisis have resulted in higher transaction fees. Users can switch pools. The pool system of the MDX platform is flexible. Participants are allowed to switch from one pool to another. On other DEX platforms, these can be more expensive due to increased gas fees.
Some decentralized protocols that participate in fundraising use MDX as a standard token for fundraising. One such protocol is HTIMO, powered by the Mdex platform. As a decentralized project, Mdex is community-driven. This means that the Mdex community is required to solve any serious and unresolved problems related to the Mdex project. This creates a space for collective management by the holders. It usually takes a majority vote of the holders to set the transaction fee ratio, to get a decision, to reach by destruction and buy back, and to revise the ground rules collected in Mdex.
The security of MDX is beyond question. This is evident in the project's top-notch features that make it outstanding. In addition, after several security audits by some strong blockchain auditing companies such as Certic, Slowmist, and Fairyproof, DEX has been confirmed as fully secure. Its work is focused on building a robust DeFi platform. It also functions by introducing IMO, DAO, and DEX into the HECO and Ethereum blockchains. MDX commission per transaction is 0.3%. There is a double split of 66% of daily revenue in MDX's operation in ratio of 7:3. The first part is used to compensate users of the MDX token and to buy HT on the secondary market. The last split ratio is used to increase deflation by redeeming and burning MDX.
Like most decentralized exchanges, Mdex does not charge any transfer or withdrawal fees other than network commissions. Network commissions are fees paid to the miners of the relevant cryptocurrency blockchain, not fees paid to the exchange itself. Network fees vary from day to day depending on the pressure on the network.
In general, if you only have to pay network fees, cryptocurrency withdrawal fees should be considered below the industry average. MDX, like all other DEXs, does not accept deposits in fiat currency. This means that crypto investors without any prior crypto assets cannot trade on this trading platform. In order to buy your first cryptocurrencies, you need a so-called entry-level exchange, which means an exchange that accepts deposits in fiat currency.
Thanks for watching this video. Check out the channel for more videos.